The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. We appreciate you growling a problem with us out here. Right now, we have the Dow Industrials up 429, Nasdaq's up 129, S&Ps are up 35. Boing!
Quite a start to the week, right?
Oh, big time. And you got to expect it, folks. We're in high volatility. You come down hard. Nasdaq could come down 6% last week. You get a bounce going. We'll see where the baby goes. Gold contract's up 420, trading at $13.54. Silver up 18 cents, $16.76. They're both catching a bid once again. That's a big number, particularly that the markets are up too.
Yeah.
Notes and bonds, you get them flat. The 10 years down 3 ticks, 120.16. 30-year 144.23. And King Dollar still can't handle it. Down 318, trading at 88.715. Euro is at 124.38 to $1 US. Yen is at 105.19 to $1 US. So tell me what's happening with Facebook. I can see.
So there's a lot happening, I'm sure. I just pulled up, like I was talking about on that update. So interesting story. I mean, and it's not stopping for them, and this could be a big one in its own right. So it looks like this was about 14 hours ago, so call it last night it comes out. But just that they've been saving extensive call and text data. Basically, if you have the Facebook app on your phone, I assume that somehow they're...
And I'm an Android user,
right. You probably haven't been on Facebook in a year, but meanwhile, you probably have it on your phone. Who knows? They probably have all of your call and your text data.
Really?
That's, and I literally just the story.
That is sick.
But Android cell phone users have noticed that Facebook has saved a virtual trove of their personal call data that extends back years, according to a report in Ars Technica, amid outcry over the social network's handling. Yeah, just as in talk about piling on.
So specifically, that means on my phone, I get the app. I haven't used it, but the bottom line, I got my app, so that means anyone I'm calling, so they have. I don't. They're following it. Right?
That's what it's saying.
Texting.
So in a statement given to Ars Technica, which I think is they're the one that is saying this, Facebook pointed out that the call log was a widely used practice to begin by uploading your phone contacts, basically saying it's a common practice, and maybe it is. But guess what? That doesn't mean it's right. As to
this has turned into a real trip. Yeah. So I guess.
Yeah.
And it's real possible that every app is doing the exact same thing.
That's and they could be right there, but guess what? Every app isn't worth tens of billions of dollars either, so they're going to pay the penalty if, especially in light. Let's see. I mean, look at that spike off. The market's up big time.
Yeah.
And Facebook, I'm guessing that this might have been when that article maybe was coming out or whatnot, right? I mean, it closed at almost 160, spikes down to 155, climbs all the way back to almost where it had closed Friday.
Yep.
And then in light of the market being up 2% across the board, you have Facebook down another 2%. So we'll see. But not what they wanted to wake up to Monday morning, another story like that.
What a trip.
I agree, man.
Let me put this back in.
And I would guess that it's probably something that is happening across the board in terms of, the endless amount of terms and conditions that you agree to when you download an app and check yes and all that stuff. But
that's why Dave White is blocking everything in his house.
Tinfoil hats everywhere to make sure they keep them out now.
Totally.
Totally.
That is wild.
It is, man. It is.
Absolutely.
Yeah.
Let's go take a look at that gold contract. So gold out here got a couple signs of strength last week. Wednesday, Friday, nice sign of strength. We're at 1354, and we get game now to 1370. It had the price spread behind it, had the volume behind it. You do that, you can see Wednesday, 470,000 contracts, Friday, 450. Nice. Silver, I'm glad that silver's doing something this morning because silver went, but silver needed another sign of strength because you can see it really didn't break out of the range. It's probably doing it now. You see how it's just, silver needs, I'm glad it is doing what it's doing this morning. We had 49,000 contracts. That's good contract volume for silver. Yeah, we did 98 on Friday. So this is good. Silver needed this, man. The Psycho Silver. GDX, we take a look at the equities. GDX, that's following through, which is pretty sweet. We did 74 million shares versus 53, you know, at that swing. So there's some action there. We go into good old King Dollar, and that's barreling down with pretty good volume, 14,000 contracts this already. So they're coming in, well, that's the other contracts, I got to look at that. But those lows are open now, 87, 830.
Not far away.
No, they're not far away. And XBT. So Monday, folks, Monday morning, Nadex spreads. See what we got.
Yeah.
Look at that, man. It's only at $8,000, $8,071.
Things have been pretty tame recently in terms of, you know, when you look at the context of the run we had up in the end of last year, right? You have CME futures opening up at about 20,000. From there, we trade down to 6, and it's quite a little triangle in terms of, you know, tightening the range here over and over, especially in the last couple of weeks. But yeah, at about 8,100, we're opening this week. Last week, we stayed pretty tight in terms of only 1,000 trading range.
So what are the spreads this week?
We will jump over. So close our natural gas, pull this up. So this week they're going from
8,000? Yeah.
I may just have to relog back in for some reason. That was so it looks like it opened. So you have an 8,000 spread. Yeah. And it looks like it opened at about 8,600 as of 8 a.m. this morning.
Yeah.
And so you're going to have 4,000 one way or the other. And let's see how they're trading in terms of, so same thing. One contract is representing half a Bitcoin.
Okay.
Right?
Yep.
Because you're going to have...
no.
Yep. Yep. This is exactly what
you add them up, right?
Well, yeah. So, right. So there's $4,000 in total between the loss and the profit.
Right.
And you're talking about $8,000 in movement.
Nice.
So it's just like, so it's one contract. So if you want to go dollar for a dollar, that's where you could see that. You know, if you bought one right now at 80.80, you trade in 2 contracts, and you have basically equal. You have dollar for dollar loss down to the floor of that, down to 4,600.
Yep.
You have profit potential up to the ceiling of 12.6. So 2 contracts represents 1 Bitcoin.
One full Bitcoin, right?
Yeah. So it'll be interesting. See if we can get some volatility. We'll pull that chart back up, but and let's just see real quick where some of the other cryptos are trading. So
I get some pretty good losses. That's 7%, right? And
Ethereum. Now this I think is that's a weekly. Yeah, we want to get this further into. Even if we put this on the daily. Our guy Paul was talking to us. Now remember we pulled back. This was the low when Bitcoin crashed to 6,000.
Yeah, 565.
565. Now we haven't even come close to that in Bitcoin. But what is interesting is now this is a daily.
Yep.
We spiked down there on March 17th.
452.
Yep. And we're still sitting right now at 486, below that level.
Yeah.
And, you know, as Paul had pointed out, you know, Ethereum is a crypto that many of the ICOs are
built on.
Yeah, with the smart contracts and so forth. So is that, if that's struggling, that could kind of reverberate and maybe be more, have more of an impact than the price of Bitcoin itself could.
Pretty wild.
Yeah.
Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. We have the Dow Industrials up 414. Nasdaq's up 119. S&Ps are up 32. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Let's go take a look at what kind of bounce you got going out here. So, Dow Industrials 1.8%, S&P's 1.7%, Nasdaq 1.6%. Now, when you go overseas, folks, you know, we'll see how we go throughout the trading day, but this is normal in a market that went down so fast, and it's also normal that it's not going to hold.
It's amazing that we're just getting this type of action on a consistent basis, right?
Yes.
Dow down 700.
Yes.
What day was it? Tuesday, Wednesday, Thursday. You lose track there so often now. And then, yeah, we opened the week up 2% before.
And that leg down on Friday afternoon was heavy.
Yeah, quite an acceleration.
At
we were
2 o'clock.
We were in positive territory, I was going to say, at 2 o'clock. And what were it, minus like almost 1-point-something% by the close? Pretty amazing.
And so when you look at the markets, like what I like to do is look at the world markets. Well, guess what? You know, there's no big bounce going on here. So that gets your probability pretty cool that this thing is not going to basically hang out also.
Yeah.
And if you take a look at where we are in the bounce, you're right at ICE. You're right where this thing, the acceleration really started at like 2 o'clock in the afternoon. Here, let's put this closer.
Yeah.
So and that's.
Oh, it was quite a run from 2 to 4.
Right.
Yeah.
So here it is here. Well, that's earlier. It's 2 o'clock.
Right on the dot.
It's 2 o'clock. This is, you know, this is a classic.
We go from above 2650. I was just going to say down to, what is it, 2590? I mean, you're talking about 60 S&P points in 2 hours. That's amazing.
It is. And this is a classic Wyckoff going back to ICE automatic rally.
Okay.
You know, that's what he called it after a monster downdraft like this. So it's going to be, this is where the Bulls and Bears are going to have to fight it out, man.
Yeah.
You know what I mean? Because the bottom line is that, you know, we'll see whether we can get up and over that level, but you can't, those same sellers are there. And what's that? Oh, my God. That's a high volume low at 10 minutes of 4.
It's that last 10 minutes
That just wants to get whacked.
Oh.
And if we go take a look at the S&P in general, what you're going to see, you had the expansion, 183 million. You're going into 283. You know, it's going to have to build more cars to get down there, but bottom line, you're in that bar. The Qs, I think you're at the top of the bar. Yeah. What was the top of the bar? Is 157.24. You get the 158.43.
Yeah.
So see, what happens in the Qs, that's actually even more dangerous because you didn't get to the top of the bar to even do the test.
Sure.
So now it can basically have some Wheaties, you know.
Get ready.
Get ready, man.
Sure.
Let's go take a look at some of the higher volume stocks out here and see what we have. Okay, so, well, Facebook's accelerating on the way down. Facebook's down 460. That's the highest volume stock out here. Microsoft. Oh, look at Microsoft. Up $5. MSFT. Look at this thing.
Yeah.
Holy cow. That, oh, I guess it was, man, I didn't realize that went down so much. I was thinking that it was going to break highs. You know what I mean? It's like $5 for Microsoft.
And the Nasdaq.
Yeah,
so
no,
last week.
that got taken too. Yeah, that got
How about Amazon? Because they're up big this morning. They were under 1,500 as of Friday, and now they're
yep, up $32.
Yeah.
Netflix, NFLX.
Yeah, look at that.
10. So inside the NDX, let's see what we got here. So Microsoft's the leader, up 6.2%. AMAT 4.4, Lam 4.2, Intel 3.8. Facebook is the leader on the way down 2.8. Paychex down 2. Not Paychex? Yeah, Paychex down 2. Alexa Pharmaceutical down 2, and NetEase down 0.8%. Inside the Dow, let's see.
Good old Boeing.
Boeing. Look at that. There's only one stock negative, and it's GE. Now, GE, folks, okay, this is so cool because you know how long I've been talking about GE and how they're, my take is that they've been cooking the books for a long period of time. It had it, so they got another article today inside the, no, on the front page of the Wall Street Journal.
Okay.
And folks, it's you want to read the article because it's such a heads up in the context of how a company can disguise losing money for so many years, right?
But especially when you're that big, right, with that much going on.
That's right.
Sure.
That's right. So now watch this. This is. Let me tell you something. This stock is like really not only in trouble. In the Journal brought it up again, like, is there any value?
Okay.
And so the value still lies in the leasing company.
Okay.
Okay, that's what they're saying. It's $156 billion they're
Okay.
claiming in value. That being said, the insurance part of it, where they come down with this $15 billion write-off, they had sold the insurance company.
Okay.
But guess what? And that's what I had been talking about.
Yeah.
They were keeping these liabilities because they signed. It'll be like you signing for someone else.
Sure.
You sold it, but you're still on the hook if they don't pay their bills.
Okay.
So they're on the hook for the insurance company. Well, guess what? Inside the capital, all the sub loans, they're still on the hook for that. And they sold the companies, but they're on the hook.
Yeah, but they weren't able to sell that. Part of the deal was the person wasn't buying that.
Exactly.
Yeah. No.
Exactly.
I was just going to look at, I mean, the slide's been tremendous, right? But even in the last 2 weeks, it's remarkable. You just go back to March 13th. We're at $14.70. Pretty remarkable. You're down almost $2 on a $14.70 stock in just the last 2 weeks, let alone going back to just, 2 months where you're at almost 20. You're talking about almost a 50%. Call it a, 30, 40% haircut from there.
Yeah. Well, they interviewed, this part here was like kind of shocking, because they were interviewing the head of TIIF, which is the
TIAA Craft,
or
whatever,
right, which is one of the largest. I think that's the teachers union, right? I think that's what it is. Okay, and it's a very large fund.
Maybe it's not the Craft one.
It's one of the it's one of the large funds.
Yeah.
And the guy's saying it's like a shocker to him. He's one of the largest owners that they have all this left over, and I was like, wow, man. Someone didn't do their homework.
Shouldn't be a shocker.
No, it shouldn't. Do you know what I mean?
That type of money in play.
And maybe after that interview, they're going to start selling down.
I was just going to say, but just like you said, I mean, that's where even the brightest of the bright, man, I mean, they're so complicated in terms of the accounting they're using that you can't just say, look at their books, because it's not that simple. Yeah.
Yeah, pretty amazing.
Definitely.
Crazy. Oof. Yeah. And let me just, I want to see PHDC. Who's taking the big hit here?
Who's in the most trouble?
Right. So you get, oh, look at this. This is sad. You know, now you know what's going to happen, folks? This is really sad. General Electric is the third largest holder of General Electric. And that's going to be all their pensions, you know.
Okay.
That you know,
Yeah, I mean, that would make sense. Just as, like, you know, if you have a pension for a company that's going bankrupt, that's an unfortunate situation,
that's
unfortunately.
Intense.
Yeah.
That's intense, man.
Yep.
354 million shares. Now, Vanguard and BlackRock, those are, you know, that's just their funds, right? That's not a State Street's going to be a fund. Capital Group is America. Franklin Resources is a fund. Northern Trust is a bank.
Hopefully. Yeah.
You know, Bank of America.
Yeah.
Whoever.
I mean, they're all, as you go down here, as funds, kind of, right?
Yeah. Yeah.
You know.
Yeah.
Government pension.
But I guess, you know, all those funds, there's people behind them,
there
right?
are. And then, you know, just looking at that, you know, 72 million shares as of December. We just went down.
They doubled. They doubled.
$20.
70. They almost doubled down. See that?
Yeah. Yep.
Imagine doubling down at 72 million.
Right. And that is, we just said it was at, you know, 20. So talking about a good 30% haircut. Yeah.
Stay right there, folks. Tommy and I coming right back. Dow's up 376, Nasdaq's up 109, S&P's up 27. Coming right back. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now up 340, Nasdaq's up 99, S&P's are up 23, and we go over to the DAX. You know, bottom line, folks, is that whether you're long or short, getting those, keep your eye on this market, because bottom line, the DAX just gave it up. We're down 49 right now. I believe we're up 75 when we just 978. Yeah, it was up 970.
150 difference, right?
Yeah.
So it would have been up around about 190, and now we're down about 50.
Right.
Yeah.
And that, let's see, we started. Actually, is that 10 o'clock there?
Yes. 9:30 is kind of where we're just in.
Yeah.
And we were. I mean, our markets even itself were higher than we are now when that. opened.
Yeah.
I mean, I think the Dow was up about 500, and we're up about 350 now.
And the FTSE, same deal. FTSE
Yeah.
just went from 69.58 to 69.20.
Yeah.
Our E-minis. Yeah, we just went from 26.30. Oh, yeah, we get some sort of acceleration on the way down.
Good
here.
19 points off the high there, right?
Yeah.
Yeah.
And now that 26.22, yeah, this is going to be quite a day. Here we go. Hold on for the ride, folks. We go take a look at the Dow. So look at the Dow. Yeah, the Dow did give it up big. 24,044.
Yeah, we're about 170 points off that high.
Man, oh man.
Yeah.
Let's go see what that VIX is saying.
Oh boy.
Because now you got, look at that. We were high of 23.53. You're at 22.46.
Yeah, there was quite a spike on Friday in the last 2 hours. I think it climbed to above 26.
Look at that.
Yeah.
26.01. TVIX. Let's go see how our man Tom in Plymouth did. That thing went to the moon. Look at that thing.
Yeah.
So we were at 1068. That swing point is 1118. You got monster volume, man. This thing's going to be back up here. This is wild, man. This is one wild ride. So we're going to have to talk to our man, Mr. Kevin Hinks. What is the ratio again? The ratio is...
16 is every 1 out of 3 days.
1% or 1.5%?
It might be, I think it was a 1%.
Okay.
Which would be like a 238 point Dow move every 1 out of 3 days.
Okay, so...
Which seems like nothing right now, right?
No,
We're just down 700, we're up 500. So, and that's the VIX was at 26. So, yeah, so I think at 24, because
that's
24 is 1.5 times 16, you would be looking for a 1.5% move every 3 days, which you can see we're even...
Which we got today.
And we're right at about 24 right now.
Right.
Yeah.
Wow. Let's go take a look at the Nasdaq futures, which there's some big movement here, too. It's
quite a trend upward for all the indices leading up to that open, yeah.
So we just went from 66.80 to 66.36.
It's a good 44 points. It's a good 0.6% in no time.
Rocking and rolling.
Forget about 1 out of 3 days. 1 out of 3 hours we're getting.
Yeah,
seriously.
no, that's why I want to get that thing down, because what seems to happen is that when you get in volatility, you really get in it, and then it seems like it's not normal, but that is normal, because that's that VIX is showing. It's going to happen. Just a matter of what day does happen. Do you know what I mean? Yep. So if we go take a look at the XAU, the HUI, they're following through to the top side. XAU's up 72 cents, 82.22. We had volume on that. That came into last Friday. Upswing 41 million, going into 30. The Gold Bugs Index was the one that we absolutely needed for the gold equities in general, and it finally got back inside the range. It took long enough, but got back inside that 174.19.
Yeah.
And it did come in with conviction, so that's a big plus. You know, we did 32 million shares going into 19 million. You know, so that's a good indication that this thing wants higher price. And good old King Dollar is the number. King Dollar just can't hold price. We go over to that euro. We take a look at the euro. Look at that. That euro, man. We're going to, you know, King Dollar's going to be approaching the lows. Euro's going to be approaching the highs. We'll see whether, you know, this thing's going to blow off the top or not. We go look at the Canadian dollar for a second. So that's hanging at 129. So that's weak. You know, that's 129. You know, like, look at that. It's down to 122.
That's beginning of February. Crazy.
Yeah. And then, let's see. The peso, peso is. Oh, this doesn't come up anymore. I gotta figure
Your
that
Bloomberg terminal's not cooperating. I
No,
know they changed the
I
system
know,
on you. It's a
man.
bummer.
Yeah, we gotta figure that out. I'll
It used to
text-
have the autocomplete.
Yeah, that's what you call it.
Right.
Okay, that's what I'll text him about.
Yeah.
I'm sure it's there.
Yeah.
I probably hit something. and-
Maybe.
Yeah.
It's possible. So how about Apple? If we take a look, because they are really rocking and rolling up, $3.50. I guess they were higher, but quite a run.
You know, well, you know what's amazing is that, like, normally you look at 350 like that's like really good, but then you look at the chart and it's like, wow, man.
It was a lot
There,
higher.
there was some destruction last
Right.
week, last 2 weeks actually.
Yeah.
You know, even though you know there's destruction, it's different looking at it when you get a bounce like this, like, wow.
Sure.
Because this was at 169.88. Well, that's selling off too.
Yeah.
And you know, all of these with sticking out like a sore thumb still, that you get those high volume swing lows,
Sure.
man.
That big February.
And those things want to get tested, man. It's all their friends are hanging out at that level. They want to know, hey, you're going to come back and visit us, and we're going to have a beer. What are we going to do, man?
Google is really close to that level.
It's so the top of that level in Google it's in it.
That's what I know. I just mean it's even close to the bottom of it, which
Yeah.
is amazing. Yeah.
Yeah. So the February 9th bar, folks, on Google, the top of it is 1,043. The bottom is 992.
Yep.
Even with Google being up $17.98, you're only at 1039.
Yeah. Still
So
in that range.
Google closed at 1,021 on Friday. Pretty intense.
No, for sure.
Yeah. You know, it's going to be interesting to see, like, how all the rest of the social apps perform now, you know, in the aspect of what's going on.
The grief that Facebook is facing.
Let's go to Snap for a second.
Yeah, they all traded down hard last week on,
Yeah.
on some of that news.
Yep. So Snap is at 1620. Now, I wouldn't be buying this. Let this thing fill the gap, man. That gap's going to get filled. It's
Yeah.
in limbo right now.
That was on their earnings release that they
Yeah.
skyrocketed higher on the
Right.
expectation that they could
Yeah.
be changing things up a bit, but
Right.
quite a pullback from there.
Twitter, TWTI. Oh, you
Yeah,
know,
they really-
so check this out. This is a trip. That hung tight.
Yeah.
Look at that.
That was quite a day, though, as the Facebook stories.
Yeah.
That's Tuesday. Yeah.
So Dorsey came out over the weekend, folks, and says, let's see if we can get this, because this is pretty cool. I heard this morning. I don't believe this would happen, but this is quite a statement that he says. Yeah, there it is. Let's hit that one.
So this is going to be a CNBC link. That takes a
Oh,
while
okay.
to load up. But
Okay.
either that says
So,
it all, though.
well-
That Dorsey says Bitcoin will eventually be the single global currency.
He's
right?
saying within 10 years. That's pretty intense.
It is.
You know, I can't see that, folks, but guess what? But you know what? It's
a
serious
smart
business.
guy, so,
You
right.
can't discount it.
I agree.
You know, you can't discount it. Stay right there, folks. Tommy and I are coming right back. We have the Dow up 359, Nasdaq up 102, S&P's up 26. Come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And if we go over and we take a look at, this is kind of interesting. We talk about Amazon quite a bit. We talk about Google and Shopify. So Shopify, folks, is a
like web development, right? Merchant solution type company.
Fast growing.
Talk about a
Canadian company.
$20 billion company, and you can see in terms of in 2014, even 2015, only $200 million, versus they're going to do $1 billion this year and 1.4 next year. Most of that growth in the U.S. But the story and how we jumped to here was that Google just won their services as opposed to Amazon.
Yes.
And the reason being because Amazon's a competitor for everybody, especially in retail.
Right.
So Google wins Shopify as cloud customer amid fear of Amazon. And pretty interesting how when it jumps down here as well in terms of it's another case of a retail-related company choosing Google over Amazon's cloud. Companies including Home Depot, Williams-Sonoma have shunned Amazon Web Services in favor of Microsoft and Google because the e-commerce giant is a rival. Pretty interesting in terms of they're rival to almost everybody when you talk about internet hosting. Well,
because then they have all your information.
Right, they have everything, right. And just that, what if they decide to one day say, guess what, we're going to end our relationship. And then you just have to scramble, right? I mean, how does that work?
Right.
Why not avoid it, I guess, entirely if you can.
Because Shopify does. It makes money on the aspect of credit cards, right?
Yeah, so they have processing, I believe, but they're developing web pages for other retail clients.
Right.
So in general, I'm sure it's something that they fear being prone to Amazon's
which Amazon can and will do in a second.
Right.
Particularly
cut Shopify right out of the mix.
Yeah, what Amazon's definitely getting in the business of, which totally makes sense, and this is where online shopping for the Visas of the world, will give them a little pressure. Is figuring out, okay, do we need 2.75% of every transaction?
Sure.
No,
the business that they give credit card companies must be amazing, right? In terms of
my God.
Right.
Intense. And what I didn't know until a couple weeks ago, and I haven't done it yet, is that if you do put in the deposit.
You talked about that. So if you loaded some on your bank, right? Whether it's using your debit card or probably just using your bank, that they give you the 2% bonus versus your credit card. No,
which is pretty cool.
It is.
No,
for sure.
Because, hey, 2% adds up, man.
They're about it. They're about passing on those discounts in any way where they can just grow the revenue.
Right. If we get over and we take a look at these E-minis, they're giving them up, man. This is going to be a wild day. Welcome to the Wild West, ESM8, because it looks like we almost got the acceleration going now.
Yeah, we're down to get 3 or 4 more points as opposed to when we just looked at it.
Yeah, look at this. We just went from 26.39. We're at 26.16.
Yeah.
Yeah.
It's a good 23 points. That's almost a full %. We're off the highs.
Man.
Can you pull up the one where it shows the percentages for all the indices?
Yes.
The WEI?
Yep.
Yeah. I mean, far cry, weird. When I did the 9 o'clock update, I believe they were all up 2%.
Look at that. Yeah.
Or at least 2 of the indices. I think the Dow and the NASDAQ were both up 2%.
Yeah, there was big numbers, man.
Yeah.
It was big numbers.
Yeah.
And, you know, if you stick, and this is where it's, when you get in volatile markets like this, it's really cool that, you know, you get Europe opened, and if you keep your eye on Europe, you know, we're in one world market, so it's pretty cool to watch. I mean, that thing started
170 points now off the highs of the DAX.
And the DAX.
Yeah.
And now the FTSE. The FTSE is at, what, 50 points off the high there.
50 points off the highs there.
And you're only talking a $6,900.
No, definitely.
You know,
that's a good 0.7%.
Right.
Same deal, right?
Right.
Yeah.
And in both cases, folks, this is what you want to wrap your head around also. So in both cases, well, I want to make sure of this, but the DAX, I mean, the FTSE for sure is under its February 6th low, which is 7,079. The DAX, I think, is just approaching it again. No, it's under it. There it is right there, right?
Yep.
That's 2003.
Yeah.
That's a problem for our markets, man. You know?
Yeah.
That's actually brings the probability higher that you're not only just going to go test that low, you're going to go under that low. And, you know, you break that low, and if we build some cars before we break that low, if I just put the cash S&P up here for a second, we'll bring this back. First, I'll bring it back 3 years. Yeah, you can. This is serious business, man.
Sure.
You know what this is, too? This is really cool. Oh, man, Mr. Bud Rolfs. Love this, how this. Sometimes when these are so classic, it's like hard to comprehend, like, how do these set up? So if we took the classic, let's see, I think it's right here that, well, actually, you could take it all the way from here, I think. No, I can't take that one. Okay, let me take this one. And what I'm doing is that you get the break with conviction.
Oh, there you go.
And then we, oh, actually, hold on, I got to make it better.
Support turns into resistance.
Yeah,
Sure.
and then this one here, like, well, that's wrong
just
too.
it's
But
skewed. We can see it.
Yeah,
Yeah.
here, let me do it again.
No, I see.
It came right up to the back hand of the trend line again. Do you know what I mean? And just gave it up.
That's
it was like, yeah, exactly.
Yeah.
It's like, you know, fundamentally you can say, oh, okay, you didn't get rid of them the first time. Okay, we're going to get rid of them. But it's like when that happens, it's like, man, that's pretty intense.
Yeah.
And now on the other side of that, you know, because we went up so dramatically without volume, you know, that's a little problem child, man.
Definitely.
You know?
Yeah.
So, and never mind, it's not like we're coming into winter adjustment, but this week, you're talking, there's not a whole bunch out there for impetus to buy the market.
Okay.
You know what I mean?
Yeah.
You know, first of the month is coming around the corner, and
Sure.
then you got it. But guess what? This whole week is like really dicey, man.
Yeah.
And never mind what's going on, you know, between tariffs and politically, and
Yeah.
you know.
Yep.
Sorry. Oh,
You gonna get a sneeze?
I think so.
Maybe.
Oh, I saved it.
So, one of the stories, let's see. So we'll have to check back in on Facebook. So just pulling this up. Facebook plunges after FTC confirms it's investigating the data breaches. So this is just coming out. We'll check back, but fell more than 5% Monday after the FTC confirmed it's investigating the company's data practices in the wake of the Cambridge Analytica breach. The FTC takes very seriously recent press reports raising substantial concerns about the privacy practices. And I was just going to say that they declined to confirm last week that it was investigating Facebook and whether it had violated that consent decree, which we went into in 2011, which from just a common sense perspective, it seems like they did, because part of it was that they wanted to make sure that people were aware, which it seemed like this is something that they purposely made you unaware that you had opted into that type of a release of your data. And if you can pull up Facebook, let's see where, because I would guess it's spiked lower from where we had pulled it up.
There we go.
Exactly. That's literally, that was like 5-6 minutes ago that news is breaking. And even just yeah, pretty remarkable. And look at that, even off the low, we're as low as 150.36.
And when you take a look at it, this is the breakout area. We're already looking at this. Is pretty cool.
Quite a decline.
And this is going to be a problem now because it came into the break area with volume.
Yeah.
150, 151. Hit 150. Guess what, man? Facebook. Well, you wait right there. As soon as we come back. Looks like 135 could be next. Stay right there, folks. Come right back. 135.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. Dow right now up 350, Nasdaq's up 97, S&Ps are up 24. I'm Mr. Basil Chapman, folks. The D, the power of the D.
That's right, man. That peak D, man.
Come over to our
rocking and rolling. Who knows? Did we make a new peak today? I don't know. We might have, man.
No.
The power of the fourth highest peak in the Chapman Wave, the peak D, a week from tomorrow. So I encourage people, get in there, give the opening call a try. You can sign up. New subscribers comes with a money-back guarantee, 30 days. Either way, check it out. You'll gain access to that this coming Tuesday, 90-minute webinar.
Week from Tuesday.
Week from Tuesday, yes, thank you. And 90-minute webinar. He'll be in there following Andy's program right at 6 o'clock, go till 7:30. That, of course, will be archived. And how to use that fourth highest peak, the peak D, as a heads up for either directional reversal. Is it going to reverse, right? Yeah. Or is it going to be a momentary pit stop to make whether it is going to be a peak E, with the F, G, I'm not sure. And then what are the weekly and monthly implications for the key indices and their peak Ds and even peak Es together with the H pattern that they've been looking at for a couple weeks in the opening call.
And you can see, we're just talking about markets. So a week from tomorrow is April 3rd.
Yes.
So you can see window dressing, right? We have all week here, folks. You know, Friday window dressing can probably start a little, but That means the first is on Friday, huh?
Yeah, we'll pull it up. No, I think it's going to be...
Is it Saturday? Yeah, Saturday. See,
Sunday. Sunday's the first.
Oh, cool.
Yeah, so
then.
the 30th,
this whole week, man, it can tank.
The 30th is Friday.
Yeah, so it's it's going to be next week. There's not a lot that can keep this market up this week. Meaning, you know, bias as to you know, a positive bias inside the marketplace to buy it.
Definitely.
So, yeah, and how has window adjusting been going in 2018? They've been window breaking in 2018. There's no doubt. You stay right there, folks. We got swim lessons coming up next. Then we get our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, Bill.
Thanks, man.
Go get them, folks.
Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads-up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com.